Thank you very much for joining me here today. To start off, some China-related stories. Confidence in the world's second largest economy is evaporating, and foreign money is fleeting. Investors have been keeping an eye on China's market and point to a number of reasons why they're wary, including the need or lack thereof for more state intervention, and as well as China has been seeing a slowed post-pandemic recovery. Meanwhile, Chinese authorities are also considering measures to stabilize a slumping stock market. Bloomberg News reported this on Tuesday, citing people familiar with the matter and drawing a skeptical response from underwhelmed investors. Here's a look.
China made a big move to stimulate the economy on Wednesday. The country's central bank said it would cut the amount of cash banks must hold as reserves from February 5th. It's the first such cut for the year, as policymakers try to shore up a weak economic recovery amid plunging stock markets. The world's second largest economy struggled to build a strong post-health crisis recovery last year. It saw distress in the housing market, local government debt risks, and weakening global demand. People's Bank of China Governor Pan Gongsheng said Wednesday's announced move would free 1 trillion yuan or $139 billion to the market.
We will cut the reserve requirement ratio for all banks by 50 basis points on February the 5th and will free up 1 trillion yuan to the market. We will also cut relending and rediscount interest rates by 25 basis points for the rural sector and small firms from tomorrow.
It's the biggest cut in just over 2 years and beyond most analysts' expectations. The reduction follows earlier cuts of 25 basis points for all banks in March and September last year. Hong Kong's Hang Seng Index extended gains after the cut was announced. It ended the session up 3.6% for its biggest one-day gain in 2 months. China's stock market tumbled 13% last year and extended its slide in the new year due to relentless foreign selling. Some analysts say more stimulus will be needed this year as authorities try to fight off deflationary risks. In December, top Chinese leaders at a key meeting pledged to take more steps to support the recovery. But so far, policy measures have only slightly improved things, raising pressure on authorities to roll out more stimulus. China plans multi-billion-dollar measures to stabilize its falling stock market. A Bloomberg report Tuesday put some numbers on the plan, citing people close to the matter. It said policymakers want to mobilize about $279 billion as part of a stabilization fund to buy shares onshore. The money will reportedly come mainly from offshore accounts of state-owned enterprises. Chinese stocks were up and down on Tuesday following the report. Shares rose immediately after the news, then slipped lower, only to later turn up again. Hong Kong's Hang Seng Index closed 2.6% higher in the end, its biggest one-day gain in 2 months. The Shanghai Composite Index rose a more modest 0.5%. China's markets have had a bad start to the year. Foreign investors have stayed away due to patchy economic growth and data pointing to more property market turmoil, including a new slump in home sales. On Monday, the government said it would step up mid- and long-term fund injections in the capital market. It said it wanted to strengthen stability and promote healthy development. But one leading investor said that while the move was welcome, they feared it was still inadequate due to being under 2% of GDP. Overseas funds have sold roughly $1.6 billion in Chinese equities so far this year, according to Morgan Stanley. Chinese investors have also largely avoided stocks.
And onto the U.S. stock market. S&P 500 climbed to a record high close on Tuesday as investors digested a mixed bag of early quarterly results and awaited key inflation data due later this week. Here's a quick recap of markets.
The S&P 500 notched its third straight all-time closing high in what was otherwise a mixed day for U.S. stocks on Tuesday. The Dow dipped 0.25%, while the S&P added 0.3%, and the Nasdaq added more than 0.4. Whether the benchmark S&P 500 can climb for a fourth session largely depends on corporate earnings, which were a mixed bag on Tuesday. Among the winners, Verizon Communications, up more than 6.5% after forecasting a strong annual profit and posting its highest quarterly subscriber additions in nearly 2 years. Shares of Procter & Gamble gained over 4% after it topped second quarter profit expectations. On the flip side, 3M tumbled 11% after forecasting dour annual earnings, while Johnson & Johnson dipped more than 1.5% after reporting quarterly results just above expectations. Liz Miller, president of Summit Place Financial Advisors, says a key factor separating winners from losers was their outlook, with investors rewarding companies who saw solid growth ahead.
Procter & Gamble was sort of flat to even nudging down when the report first came out, but the stock completely turned around on the conference call when guidance was given to that strength in North America and a very positive outlook for 2024. And that's the common theme across all the winners today.
Netflix, which closed up more than 1%, rallied more than 8% in after-hours trading when the video streaming service reported subscriber growth that blew past Wall Street estimates for the fourth quarter. Shares of D.R. Horton ended down more than 9% after the homebuilder missed estimates for first quarter profit. Investors are awaiting Friday's Personal Consumption Expenditure, or PCE, index, the Federal Reserve's preferred inflation gauge, as well as this week's first estimate of fourth quarter GDP, both of which should play key roles in the Federal Reserve's next decision on interest rates when it meets at the end of the month.
The CEO of Boeing is answering to lawmakers today after a door plug flew off mid-flight this month. The company is also answering to angry customers. Here's more.
The CEO of Boeing is on Capitol Hill today to meet with lawmakers, according to Senator Maria Cantwell's office. She chairs a committee that handles transportation.
It makes you mad that we're finding issues like that on brand new airplanes.
The FAA says it has increased oversight of Boeing. That's after a door plug flew off during an Alaska Airlines flight earlier this month. The agency's asking airlines to check such plugs on their MAX 37-9 planes. It says so far the aircraft design appears to be okay, but a manufacturing error like loose bolts could be the problem. Alaska and United Airlines say they've found those on other planes of the same model.
So when all these bolts are in, they're against these stops, that door's not going anywhere.
Boeing says it'll pause production at the plant that makes 737-9s Thursday for quality control. The affected aircraft remain grounded. United says that affects a chunk of its fleet and its bottom line. Meanwhile, federal regulators continue investigating this month's accident.
We will look at everything from manufacturer through delivery and past delivery. We cannot rush through this.
I'm Amy Kiley reporting.
Tesla has told the suppliers it wants to start production of a new mass-market electric vehicle codenamed Redwood in mid-2025. And this is according to 4 people familiar with the matter, with 2 of them describing the model as a compact crossover. Here's the report.
Tesla cars could soon be getting more affordable. Reuters sources say the firm has told suppliers it wants to start mass production of a cheaper model in mid-2025. 2 of the sources described the vehicle as a compact crossover. Right now, Tesla's cheapest car is the Model 3, which starts at just under $39,000 in the US. But boss Elon Musk has long vowed to deliver a much cheaper vehicle. He's promised to make one that can be sold at $25,000. That plan may now be more urgent. Tesla faces mounting competition from rivals like BYD, which can undercut it on price. The Chinese firm overtook Musk's company as the world's top maker of EVs in the final quarter of last year. High interest rates are another worry. They could crimp demand for relatively expensive cars like Tesla's. Now the Reuters sources say a model codenamed Redwood is being prepared for its debut. They say Tesla has contacted suppliers about parts. It has forecast weekly production of 10,000 units, with output to begin in June next year. However, analysts warn the firm has a long history of missing targets for launch dates and pricing. The firm didn't comment on the reports, but Musk did say last year that Tesla was working on 2 new products with a potential for combined sales of 5 million units per year.
And the residential real estate market took a tumble in 2023. A new report released shows housing sales haven't been this low since 1995. So let's take a look at the numbers and whether the market will be more buyer-friendly this year.
Home sales took a hit last year, dropping to the lowest levels in 28 years. Just over 4 million homes were sold in 2023. That's a 19% drop from 2022, according to data released last Friday from the National Association of Realtors.
There are simply not enough homes out there.
Home prices, though, hit a record high. The median home sale price last year was $389,800. Up 1% from 2022.
It's been a great news for homeowners, but very difficult year for home buyers.
The combination of high sticker prices and fewer homes for sale is making the buyer's market even more competitive, and that's driving down home sales. Yoon says fewer people are putting their homes on the market because they've likely locked in lower mortgage rates.
Homeowners are loving their 3%, 4% mortgage rate and do not want to give that up.
But there is good news. Mortgage rates are starting to come down. The 30-year fixed-rate mortgage averaged 6.60% in the week ending January 18th. That's down from 6.66% the previous week, according to data from Freddie Mac released last Thursday. And more homes usually come on the market in the spring.
We do anticipate more supply to steadily appear this year.
If you are looking to buy a home this year, Yoon recommends staying within your budget. Don't rush a decision. Look for the right inventory. Don't put too many contingencies into the contract, and be flexible on the closing date. That will make you look more attractive to the seller.
New York has just been awarded $228 million to build its high-speed internet infrastructure in the state to connect people in underserved and rural communities. The U.S. Treasury approved the funds from the $10 billion COVID-era American Rescue Plan. That was aimed at getting internet to people. The Biden administration is gearing up to sell voters on its economic policies as former President Donald Trump looks poised to take the Republican nomination. Netflix on Tuesday blew past Wall Street subscriber estimates in the fourth quarter, driven by a strong slate of shows that included the final season of the long-running royal drama The Crown and David Fincher's original film The Killer. Take a look.
Don't really understand how I ended up here.
Netflix has ended up on top, driven by hit shows like The Crown. The royal drama helped it post record subscriber growth for the fourth quarter. On Tuesday, the streaming giant said it had added 13.1 million new customers over the period. Analysts had forecast just under 9 million. The numbers saw Netflix shares surge over 8% in after-hours trading. The company credited a strong slate of content, which also featured titles like Hitman movie The Killer.
Stick to your plan. Trust no one.
At $8.8 billion, revenue also just beat estimates. Looking at the figures, one Bank of America analyst said it was clear that Netflix has won the streaming wars. The firm said it expected double-digit revenue growth in the year ahead, with more subscribers and rising income from advertising. Over 2024, it will boost investment in content to as much as $17 billion. It also continues to invest in live programming. Earlier Tuesday, it announced a deal valued at over $5 billion to bring some world wrestling entertainment content to the platform. Netflix also has a fledgling gaming business and has even launched its first stage show, a play based on hit supernatural drama Stranger Things.
And Johnson & Johnson beat out Wall Street expectations as it reported strong sales. J&J's fourth quarter revenue of $21.4 billion just narrowly topped estimates. The company benefited from people initially getting surgeries they postponed during the pandemic, as J&J's medical device business generated more than $7.6 billion in the fourth quarter. And sales of its blockbuster drug came in at nearly $3 billion. Sales are expected to stay strong this year before competitors enter the market in 2025. And sales of consumer goods are likely to show stronger numbers in Europe's fourth quarter than in the U.S. Analysts believe it's because price hikes hit the U.S. earlier and the worst of it is over. The U.S. has already started seeing prices ease while Europeans are still dealing with the spike in prices. Monthly data shows persistently higher prices in European countries. Procter & Gamble estimated store sales growth in November last year was more than 6% in Europe, but only half of that in the U.S. One analyst said that sales growth is higher right now in Europe, but when pricing normalizes, like in the U.S., they will see similar lower growth. And eBay joins the list of tech companies laying off employees in the first month of 2024. The company's CEO announced Tuesday it's cutting 1,000 jobs, and this is about 9% of its full-time workforce. The online marketplace also plans to scale back contracts with its alternate workforce in the coming months. eBay's chief cited the, quote, challenging macroeconomic environment for the cuts, adding that the company's headcount and expenses have outpaced the growth of the business. And eBay is hardly alone with job cuts in the tech industry. Duolingo recently laid off around 10% of its contract workers in favor of relying more heavily on artificial intelligence. Amazon as well cut hundreds of jobs, while Google hints layoffs could be ahead in the coming months. And an Oakland InNOut burger has run out of options, it seems like. They're being forced to close because the crime in the area has made it too dangerous for people. NTD's Sean Marshall has more.
The only InNOut burger in Oakland, California is closing March 24th due to crime and safety concerns for customers and employees. Customers had been victimized by car break-ins, property damage, theft, and armed robberies at a location near the Oakland International Airport. Bundy, a lifelong East Oakland resident, said there are warning signs in front of, in and out, and throughout the lot. He witnessed thieves breaking into a car next to him. Less than 2 months ago, it happened to his truck when he ate inside the dining room. They're trying to steal my vehicle, but I had a kill switch on, so they couldn't get my vehicle, but they took all my belongings out, recalled Bundy. The InNOut closure comes as the police force struggles to address violent crimes which are prioritized ahead of non-violent incidents such as car break-ins. According to department data, violent crime in the city last year increased 21% over 2022. Vehicle break-ins increased 23% and vehicle theft increased 45%. President of the Oakland Police Officers Association said, it's not that we abandon property crime, but we just don't have the resources to address it effectively at this moment. A Starbucks store in the same lot shut down last year. Sean Marshall, NTD News.
And Bitcoin has fallen to 7-week lows, hovering around $40,000 for the first time since the launch of 11 spot Bitcoin ETFs earlier in the month. Here's the report.
Bitcoin has tumbled to 7-week lows around $40,000. It's the lowest level since the launch of 11 exchange-traded funds featuring the cryptocurrency earlier this month. The eCoin's debut on New York exchanges had sparked enthusiasm among fans. Bitcoin gained around 70% ahead of the launch as traders bet the ETFs would help draw in more everyday investors. It's now fallen back by around 20%, and some analysts say the slump was always likely. They note that Bitcoin also tumbled following other big crypto events, such as the IPO for major exchange Coinbase. Other market watchers say Bitcoin just hasn't been able to compete with regular stocks over recent weeks. Money has poured into equities as US markets surge. On Monday, the S&P 500 index hit a fresh record high for a second straight session. Tech stocks have led the gains after Taiwan chip giant TSMC said last week that AI would drive a boom in demand for high-end silicon.
And cancer cases are in the rise among U.S. adults under 50, but no matter the age, when cancer strikes, early detection is critical. Now, a look at new artificial intelligence technology being tested at a U.S. hospital that may help to quickly and accurately diagnose cancer.
When it comes to cancer detection, pathologists typically review slides under a microscope to help determine a diagnosis.
At our institute, we've launched a digital pathology program, which allows us to convert that class slide into millions of pixels, which can be reviewed remotely by a second pathologist.
Dr. Anil Parwani with the Ohio State University Comprehensive Cancer Center says they're now testing new technology involving artificial intelligence using algorithms to detect and grade cancer.
When we are detecting cancer using glass slides under the microscope, we are limited to how many people can see it, how many people I can consult with. But once it's in a digital format, not only can an expert review it, but we can then apply artificial intelligence algorithms to detect cancer.
Parwani says the algorithms can be trained to detect specific types of the disease like prostate or breast cancer and not only catch the cancer, but also determine how much cancer is present in the biopsy and potentially may provide information to help with the prognosis of the disease.
So we are in a very exciting time in diagnostic pathology because we have all these new tools available to us, which can help oncologists, which can help cancer patients like never before.
Director Greta Gerwig and actress Margot Robbie, the women who helped make Barbie the runaway box office success of 2023, failed to land directing and lead actress Oscar nominations on Tuesday. Here are the details.
And now for our final category.
With the Oscar nominations revealed, some big names failed to make the cut.
Hi, Barbie!
Hi, Ken! Greta Gerwig and Margot Robbie, the women who helped make Barbie a runaway success, were left out of the directing and lead actress categories. And Leonardo DiCaprio, who played the lead in Killers of the Flower Moon, was passed over by Hollywood's Film Academy for lead actor. While both films snagged 2 of the 10 Best Picture nominations, entertainment reporter Liz Chenier said the snubs are notable.
The conversation around Barbie is obviously Margot Robbie did not get the nomination, Greta Gerwig did not get the nomination, Dua Lipa did not get the nomination. However, America Ferrera did, and we'll also be seeing Ryan Gosling perform I'm Just Ken on that Oscar stage.
Barbie snagged 8 nominations in total, including Gerwig for Best Adapted Screenplay. But while the film came out on top in the summer box office, it is rival Oppenheimer that racked up more Oscar nominations. The epic film about the race to build the first atomic bomb landed 13 nods, including Best Picture.
About what's happening here.
Cillian Murphy, who plays the titular role, is also in the running for lead actor.
It's Oppenheimer. Everybody's singing for Oppenheimer. It's the most nominated film this year, which is no surprise.
Also left out, Penelope Cruz for her supporting role in the high-speed racing drama Ferrari. Bradley Cooper was left off the Best Director list for Maestro, though he was nominated for Best Actor.
Oh, Miss Celie!
And among the overlooked films, The Color Purple received only 1 nomination. The winners are chosen by the roughly 11,000 actors, producers, directors, and film craftspeople who make up the Academy of Motion Picture Arts and Sciences. More women and people of color were added following the #OscarsSoWhite uproars of 2015 and 2016. Talk show host Jimmy Kimmel will return as host of the Oscars ceremony, which will be broadcast live on Walt Disney's ABC on March 10th.
And thank you for watching NTD Business. That's all the stories we have for you today. See you next time.